morning and welcome, Petro Radio News Hour. Joe and Jason on this Friday. Jason will be with us in a little bit, but we've got a big deal brewing already. So we're going to get right to it. We don't even have time to mess around today. Gold getting ready to go into positive territory again, above $2,411 right now. But we've got an opportunity, a big special, so we're going to go right to it. We have Mint State 62 $20 Liberty. So the $20 Liberty, right? That's our, the bread and butter coin, the 1 ounce pre-1933, right? The Liberty Series, 1866 to 1907. These got graded by PCGS and NGC. That's it. Those are the two best grading services out there. So it comes in those hard plastic cases. They're worth more, because they're in better shape than the other coins. And normally what that means is these coins got minted, they got put into treasury bags. Think about it. There would be 1,000 $20 gold pieces in a bag. And, it's going around by stagecoach, and the bags would bounce up and down and all around. And the ones that were kind of closer to the middle, not at the very bottom or the very top, they got banged around a little less. They got, less of those bag marks and all of those types of things. We've got them for less than a regular $20 Liberty today. Remember, I told you yesterday about pricing. So today, gold isn't up yet, but get ready. But a regular $20 Liberty, $2,615. And I'm just going to tell you right now, gold goes up $10 or $15 today. We have to just pencil in probably $2,650. We've got these MS62 PCGS NGC grade $20 Liberties, $2,595. So it's going to be $20 less than our regular $20 gold pieces. And, you got to remember, we've got the circulated, which we sell. Then you got XF, EF, AU, BU, right? MS60, 61, 62. You're going up a ton of grades, and every grade costs a little bit more. So you're going to get great value. But here's the deal. This is limited. There's 200 of them available. But this was a deal they offered to every dealer in the country. The world's biggest wholesaler was offering this deal. And when you think about cost and everything else, stay away from bullion. They put it right in the special report. Why would you want to buy a bullion coin that would be IRS reportable? That's what they put right in their little presser here. But Mint State 62 $20 gold pieces below our regular $20 gold today, $2,595. I don't know how long it'll last because I don't control it. Everybody else is going to have this same deal. 800-951 0592. That is our toll-free number. The website at allamericangold.com. And news broke yesterday. Really kind of a big thing here. The London Bullion Market Association, the World Gold Council, along with the Bank of International Settlements, is pushing to have gold reclassified once again under the Basel III banking framework, according to a publication. There's been talks between the Bank of International Settlements, the World Gold Council, and the London Gold Market to classify. Now, gold, remember, what was it? I don't know. I can't remember exactly when it was, if it was 2 years ago, 3, 4, 5 years ago. But gold got reclassified as a Tier 1 asset. Right now, Tier 1, that's the best. Well, inside of Tier 1, they have the best of the best. Right? And they want to now move gold into the very best classification that they have, which they refer to as a high quality, so that's tier 1, right? High quality liquid asset. So not only are you high quality, but you're liquid. In other words, there's no problem with a bank having to sell gold as a way to offset losses or what have you. This will allow banks now to start holding gold. They consider gold now like cash or a treasury bond, right? Because that's the other quote-unquote high quality liquid assets. Stocks fall into that too, right? Banks, because they like to do their own investing. So now the World Gold Council, along with the Bank of International Settlements and obviously the gold markets under Basel III implementation, it appears that gold now will be the highest form of asset that a bank can hold, providing evidence that gold meets the criteria of a level 1 high-quality liquid asset under the Basel III regulations, underscoring gold's resilience, liquidity, stability, and particularly in times of financial stress. Well, you get the idea. Interesting, the timing of this change, right? We already know all these central banks are buying the you-know-what out of gold. What do you think that says for the future? MS62 $20 gold pieces. Get them while you can. We'll be back after the break. 800-951-0592. MS62 $20 gold pieces. Do not let this one get by you. Gold, by the way, looks like it's just getting ready to go, but now down just $2. Gold was down about $22 earlier this morning, coming right back here. Looks like a good test of 2,400. Now it's getting on the move again. Just huge value here. Cheaper than a regular $20 gold piece today, $2,595. Remember, I have no control over how long it will last. 800-951-0592. As we look in here, the Dow's up 300 points. They're excited. Now, yesterday, everything finished down yesterday on the Dow. Kind of a bounce back here. We did get bank earnings, and they were kind of I guess the best thing you could say, they weren't terrible, but the Dow's up 300, the S&P's up 50, so back towards that record high. The Nasdaq's up 200, the 10-year note down at 419. Crude oil's higher, over $83. Like I said, gold getting ready now to go positive here, $2,415. More intervention from Japan today on the yen. Yesterday, they started $22 billion yesterday. If they're doing that today, I don't know how much firepower Japan has left. But again, we told you, you're getting ready for what comes next. You're getting ready for what is going to happen. And listen, it's not just here. This is going to be global. We talked about Target no longer accepting checks. In Australia now, the 4 largest banks in Australia, by 2027, no checks anywhere in Australia. And oh, by the way, 3 of their largest banks are saying they're no longer going to do cash. You better get ready and get more diversified. This news out of the Bank of International Settlements and the World Gold Council, believe me, they're getting ready for the next phase here. You need to do the same. You need to get more diversified. That's why I keep telling, if you got $50,000 or more, check out our buddies over at YRefi. Get up to 10.25% fixed rate of return. What happens if next year, if the S&P, maybe not even next year, what happens in 3 months, the S&P drops 20%? You're still getting 10.25, right? What if it drops 50%. You're still getting 10.25. What if they can't reinflate it? Because, well, let's face it, nobody wants to buy stuff. By the way, another terrible auction yesterday. We'll tell you about it. You still get up to 10.25% fixed rates of returns. They don't play games. They don't charge fees. You can turn your income on. You can turn it off. You can do whatever the heck you want with it. And the best part is if you need your money back, they never attack your principal. Check them out. InvestYRefi.com. Or just call them. That's the easiest thing. Just call them. 888-YREFI24. 888-YREFI24. Now, as we were talking about, all of a sudden, they want to make gold it's already a tier 1 asset, but now they want to make it the highest level of tier 1 assets. Why? Well, number one, it meets all the requirements. It tells you the depth and liquidity of the gold markets. Of course, look at its performance. They don't want to tell you this. Gold's outperformed everything over the long haul. It has. I know people get mad when they say, oh, that's not true, the stocks. And of course, they always go back to the stock markets from like 1800. Well, the gold was the money then. Go back to 1971 when they let gold trade freely, and you'll be able to do the math just like us. But is there something else at work here? There's another word out. India and Russia. Remember the Indian prime minister in Russia, gave them the great big bear hug, and they are very close. They have signed deals now, hundreds of billions of dollars, and they said they will use none of it in U.S., none of it in European, none of it in Japanese or British pound. They will not deal in those currencies. They are going to deal with their own currencies. They're going to deal with the Chinese currency. But then they said, oh, by the way, we're working on a BRICS currency. Here it comes. Speculation abound that the currency will have some sort of gold backing. Now, does that mean it's going to be like it was in the U.S. prior to 1933, where, hey, if you wanted to create $20, you had to get a $20 gold piece out of the ground? I don't think so. But could they say, hey, this BRICS currency is 10%, 20%, 30% backed by gold? That appears to be the speculation right now, that this is how they're going to get massive credibility to their currency. Remember what Saudi Arabia said earlier this week as well about, hey, you take Russia's assets, you steal those assets, we're selling your bonds. Jason, a lot of things kind of happening underneath this whole, because everyone's worried about, could Joe Biden be president? Donald Trump's Joe Biden's vice president now. I don't know if you saw that last night. But everyone's sleeping, right? Oh, my gosh, S&P's an all-time high. They're rewriting the rules on gold, and I think this is going to be a big piece of what we're going to see happening as this bubble bursts and we go digital, banning. Look at the check banning that's coming. Australia leading the way now. All of their major banks will stop. Nobody, if you create a new account in Australia today, you don't get a checkbook. And by 2027, they won't even let you write checks. And by the way, 3 of their biggest banks say you can't even get cash out. Yeah, we're getting rid of it. And Jason, this is big news. And I think this is probably part of the reason yesterday we saw gold spiking the way it did. And look at what it's done today, coming all the way back here. I think we're going to see a much different picture. And when we start seeing all these banks talking, gold's going to be $3,000 in the next year. Why? I mean, that's another $600, right? Think about this year, it's moved almost $400, and people were freaking out about that. Jason, I think it's going a lot higher than that.
Gold is definitely going to keep going up, especially with the business cycle that we're getting ready to hit. The world economy is going to have a lot of problems. So gold is going to react to that. It's the flight to safety. As you were saying, the BRICS possibly backing a BRICS currency up. They've made mention of this in previous months and years. Remember, they said one of the ideas was a basket of currencies. I think the basket of currencies was definitely Russia's idea. And I think with China being financially maybe being the biggest player, and India being involved, I think it will be gold. I think the gold backing, whatever percentage, like you said, I think makes sense. I think there would be a little too much infighting with the basket of currencies, Joe, because certain countries have a little more of those basket of currencies. That's probably the idea. Is like different countries have different commodities, but when it really comes down to it, with all the jockeying for position that these central banks and these countries are doing with gold recently, kind of obvious that it's going to be, and here it is, it'll be gold back, Joe, if when they do the reset globally of this monetary system, if you get rough, rocky waters, gold will come in to stop the rocky waters, because they don't want gold in there. I'm going to tell you right now, I don't care which country it is. They don't want gold backing at all. They just know that they may have to do this to settle the really rocky waters that are coming, Joe. That's what I see.
Yep. Yeah, and putting the pieces of the puzzle together here. India, right? All of a sudden saying, hey, we're bringing all our gold home. Right? India has hundreds of metric tons. Of course, they've been continuing to buy gold. When we did the math, right, we've had 2 straight years of essentially record high central bank purchases of gold. But here's the thing. You don't have to tell people you did it. We had record high central bank gold buying that they wanted us to know about. The problem was when we added up all the math, right? Because we know how much gold was mined. We know how much gold was recycled. We know how much gold got sold. There's 1,000-ton difference, right? 1,000 tons more gold was sold than what they talked about. And obviously we know China's part of that, right? They have a lot more gold than they're saying. But remember, people were speculating last month that was buying a lot of gold, and they just don't want to know about it. And then you think about their comments earlier this week about the Russian assets. You think about India repatriating all of that gold. Then Nigeria, who, they're in the mix. They've applied for membership. They repatriated all of their gold. But it really was the details of this meeting between India and Russia this week where they talked about, hey, here's all the deals that we've committed. We're going to buy a ton of stuff from each other. But it really had to do with, here's the currencies we're going to use to do it. The rupee, the ruble, the renminbi. But, oh, by the way, we're coming up with our own. To be doing these deals. They're already working on their own clearing system, their own SWIFT system. The BRICS nations are very close. Matter of fact, from what I'm told, this process is well underway to where they can clear with currencies, any medium of trade, including gold and other assets, maybe Saudi oil, that they're going to be able to do this clearinghouse. So, Jason, I think this is something where tie this with now that the World Gold Council and the Bank of International Settlements is going to make gold a highly liquid tier 1 asset and all of these other, it really does start to look like, okay, something big is getting ready to happen.
Right, and countries that have really bad debt to GDP, Joe, if you go into any kind of a gold-backed type situation, the worse you are debt to GDP, the worse it's going to be if some sort of gold-backed anything shows up. So what do you? I think if I know, I mean, I don't know how high America ranks. Are they number 2 worst debt to GDP? I know Japan's worst. So I mean,
Japan's
it seems
worst.
like
I think Italy may be worse, France, right? But we're right there, And of course, you got to remember,
but not China, Russia, and India.
Right. We lie about it, and what I mean by that is they don't count the $7 trillion that the Federal Reserve holds. They don't count it. They don't count whatever is the fake surplus that's still left in the Social Security Trust Fund. So right now they're saying that our debt's $28 trillion. That's what they say is held by the public, right? But it's more than that. It's really $35 trillion. It's really $42 trillion, right? That's really what the number is. But that's not how they count it. So they're saying our debt to GDP right now is about 100%. It's really significantly more than that. But the bottom line is, just look at June. By the way, here's another great. June set a new record for the amount of interest paid to roll over our national debt in a single month. Remember we talked about June? I thought June was going to be big because I knew about this rollover. $140 billion of interest in a single month. Yeah. MS62, $20 Liberties, $25.95. That's insane. 800-951-0592. The best special of the week, and we've had great ones. Really, this week probably one of the best weeks for some of the specials that we've done. But a Mint State 62 $20 Liberty PCGS or NGC certified. $20 less than our regular 20s. And by the way, gold was down $20 this morning. It's like down 2, right? I mean, the prices are going to be even higher. And look at what we just talked about. The writing is on the wall. You know what's so interesting? Citi. Remember Citi yesterday? Oh, yeah, okay, gold's going to be 3,000. You know what they said? Central bank gold buying is going to shatter records. And of course, we've been breaking all these records. And now, of course, China's saying, well, we stopped buying for a couple of months. Did they? Doesn't look like it. But the problem is, it looks like all these other BRIC nations, that's exactly what they're doing and getting ready for what comes next. Because they all know, listen, they know. Look at what's happening. I mean, Japan now is having to spend, what, $50, $60 billion every 60 days to try to keep their last report I heard, they had about $100 billion of ammo to use. They used $22 billion yesterday. They're in the market again today. Now, I don't know if are they using another $22 billion? I mean, because it looks like, hey, they've only got a couple months left of powder at that rate. Then what? Then what? I think all of this is getting ready. Remember what we're talking about. This was the year of chaos. We're getting ready to. I'm hoping it's 2025. Remember what I said about it doesn't matter. Trump, Biden, whoever. I don't want to be the president now. I'll just say that right now. The guy that's sitting there getting inaugurated in January, yeah, you're going to wish you weren't there. That's what, and there's nothing they can do about it. Why was gold down early this morning? Producer prices came in hotter than expected. So CPI was low. Consumer prices, it was up 0.2 month over month, but they raised February, so it was actually worse than that. Year over year, 2.6. They were expecting 2.3. Core CPI up 0.4. By the way, year over year, now at 3%. That's double. Again, the up 0.4 was double the expectation. By the way, that is the highest level. So it's from March of 2023. Resurgence in service costs even though energy was down, consumer, this is the producers. And Jason, we've talked a lot about this. This is going to be a crash with prices staying high. It's something we really haven't seen before.
That's correct. And, it's Friday, so there's only a couple of dollars down on gold. It is very possible that we see record high gold by the very end of the day when everyone's going home, for the weekend, and gold just sneaks back. We'll just say gold goes from being $5 down right now to up $5. Watch out Monday. It's not a big deal, but it's big enough that gold held its position. And it could very in a sneakfully way, if that's a word, could end up at a record high later today, Joe. Because $5, we can shed that in the next hour. So $25.95 for an MS62 $20 gold piece is an outstanding ability to get into gold right now if that's in your price range, and multiples if you can buy more, because it's just going to keep going up. It's just going to keep going up. We're going to keep saying it, but here's the thing. You guys are always talking about how gold's going to go up. Well, the reason that I can confidently say gold will continue to go up is just examine your experience. When is the last time that the costs of goods and services through your entire life have gone down? And I'm talking about technology and gadgets and things which do go down after they first appear. I'm talking food, energy, rent, gasoline, all the stuff that you need. When has that gone down in your lifetime? It doesn't. So gold will continue to go up. That is exactly what we're selling here. We're selling you with something that will always go up. It's not going to be more valuable. Here's the thing. We're selling you something that's not going to be more valuable. 1 ounce of gold and a cow. It's been that way for as long as any of us have been alive, in our fathers, grandfathers, great-grandfathers. Gold's not doing anything. The reason you need to hold it is because the dollars, your currency, which you need to spend to buy your rent and your food, your gas, your dollars are being destroyed. Don't hold on to them for a long period of time. Put it in gold if you need to hold something long time. If you need to save money, you save it in gold and silver. Today's a great one to do, Joe.
Yeah, great one. By the way, yesterday's 30-year auction, an absolute disaster. The second worst tail since the record tail that was in November. But it really was the bid to cover. Oh, I don't know that I've seen a bid to cover this low. 229. This is a bid to cover that's like a 2.5, but 229. We're starting to get closer to 2, right, and below 2. I mean, that's not good, which means, hey, there's less and less people bidding. Now, 30 years. No one wants to hold U.S. debt for 30 years. They just don't. In there, when you looked at it, internals were also bad. Indirects, just 60% of the auction. The worst since the worst auction they've ever had in November. This is the second worst, which, of course, happened after, Jay Powell and all this dovish nonsense. By the way, the directs had to take almost 25% of it. That is the highest going back to August of 2014. The rest of it went to the dealers, which they were stuck with more than they wanted, right? Over 16% of it. Jason, we talk about these ugly U.S. auctions, and eventually, right, we're going to get to this point. What's going to happen? Like what Bank of America said, hey, we're just one bad thing away from these auctions not being run smoothly, for liquidity problems to happen in the U.S. Treasury market. And now, by the way, you got to remember, U.S. Treasury, that's a high liquid asset. Guess what? Now gold's going to be a high liquid asset. What do you think these banks would rather hold? A 30-year note yielding 4-point-something% or gold? Now, I think, Jason, it's a no-brainer. They're going to hold gold. Why? Because the Fed says they want 2% inflation a year. Well, you do that for 30 years. That means they want the currency to be worth 60% less. 800-951-0592. $20 Mint State 62s, $2,595. Jason and I, we're going to be right back. 800-951-0592. We still have some Mint State 62 $20 gold pieces, $2,595. That is less than our regular $20 gold pieces today. Jump on this. By the way, consumer sentiment was out today. Another big drop. This was a little bit unexpected at the size of the drop, all the way down now to 66, the lowest in years. And, oh, by the way, housing conditions, a new all-time record low. Not only did it take out the COVID lows, it took out the housing crash lows about, is this a good time to buy or not? And, oh, by the way, sentiment amongst Democrats dropping the most. I think that's I think everyone can figure out how that happened, right? You got a guy that doesn't even know who his vice president is and who, well, I guess Vladimir Putin's in charge of the Ukraine as well. He probably is. So maybe that was just telling the truth there. But also now, a recent report out of the American Statistical Association says that government data is facing increasing challenges in their ability to produce relevant, timely, credible, accurate, objective statistics, and saying that we're getting to the point, Jason, where a lot of the reports the government is spitting out are going to be viewed as completely unreliable. This is not a good place to be when you're talking about, hey, the credibility of all of the debt that we have is the full faith and credit of the United States. Jason, I'm not surprised because people have been openly questioning a lot of this data.
I've been doing that for a long time. I don't trust any of the information that comes out. You come on here every day and you have these numbers, and every time you read them off, it's like, well, how do they fix this one to benefit themselves and their friends? How do they fix this number? Why is this number coming 3 months later? Oh, they're readjusting, like the jobs numbers. Last Friday, Joe, and we were on vacation, and they adjusted the 2 previous months way down. It's like, isn't this your job to give us accurate numbers? Why do we have to come 2 months and a month later and have the numbers tooled way down? How did you miss by that much? I think they missed by like 40% or almost 50% on one of those months, Joe. If the average American is having a low faith on the information they're getting, my only question is, what took them so long? Joe, this is one other reason why you buy gold. Gold doesn't lie to you. Gold is gold. How many ounces do you have, right, Joe?
Yeah, that is really the big thing. And then, we had bank earnings out. J.P. Morgan, Wells Fargo, I think it was Citi was the other one. Kind of a mixed bag. But in J.P. Morgan, the net charge-offs, $2.23 billion. That was just below expectations. But then they raised the amount of credit loss reserves much higher than expected. So again, the big banks, they're starting to write off all of this commercial real estate and all this other stuff. But the size of these write-offs is really what caught my eye, because it's one thing for J.P. Morgan to say, okay, we're writing off billions of more dollars. They can do that. But these regional banks, these banks, say bank, I don't know, 12 to 30, the 12th largest to the 30th largest bank. Jason, they don't have the magnitude to be able to write off these kinds of numbers. So it really was for the big banks, Wells not so great, Citi, J.P. Morgan, but the big thing was big write-offs coming from the banks.
And the smaller banks not having that ability, that's kind of the plan, isn't it? The smaller banks fail and they get gobbled up by the bigger banks, and I mean, how many banks do we have just 30, 40 years ago, Joe? I mean, it was 16 or 20,000 banks, whatever it was, like
16,000
beginning
banks,
of the century.
Yeah. 16,000.
Where we have 4,500 or 4,200. We're at a quarter of the banks.
Yeah, if you count everything that they say is a bank now, even though it's stuff that aren't banks, I think we're at like 4,400 banks, but really traditional banks, we're down to about 4,000. And the realities are that's probably 4,000 too many.
I just heard a piece at the G7 meeting that happened a while ago, and it was Larry Fink of BlackRock saying, well, we don't need these traditional banks anymore. We're the future. Private equity will be the banks of the future. Just saying it right out loud, Joe. What we're talking about in the future with digital currencies and banks going away, and how little freedom you're going to have to transact in the way that you want to, and especially the privacy of transacting will go away. So, but yeah. Banks are, according to Larry Fink of BlackRock, banks aren't going to be banks anymore. We're looking. Things are going to change. We're going to firms like mine. We're going to be the banks. They're literally talking about how the banks will just be inconsequential, not necessary. So it's a crazy world that we're heading into, Joe. We keep saying it. There's big changes coming. Big changes. This is why I brought the debt to GDP, Joe, earlier, because if you do a monetary reset, the debt doesn't go away, and you go into a new monetary system worldwide, and those with the huge debts are the losers. Those are the ones that the debt's not going away. You still owe it. America is still going to owe all that money to China and to Japan, and you suddenly switch the value of everything, and you end up poor instantly. And that's what we're headed for, Joe. It's going to be incredible what's going to happen in the next months and years.
Wait till you hear this coming up next. Interest on the national debt by the end of this year. You're not gonna believe it. That's coming up. Final segment. Man, I needed you to buy gold from when we started the show. Wait till you hear about this. We'll be back. How high is gold gonna go? Wait. I just can't believe it. So, interest on the U.S. debt. I just told you about what happened in June. 140 billion just in interest in a single month. They're now saying that at the end of this year, so 2024, interest expense will be $1.6 trillion. That will take out Social Security. So right now we just passed defense, right? We just passed defense spending at 1.1. But in 6 months, it's going to be 1.6. In April of 2025, it's going to be $1.7 trillion, which will make it the largest expense on the government's balance sheet. So Medicare, Medicaid, if you bundle those two together, they're about 1.65. If you separate them all, by the end of this year, interest on the debt will be the biggest expense, but usually they put Medicare, Medicaid together. By April of next year, Jason will spend more money on interest on the debt than anything else.
For anybody that's not following along, this is the interest payments on the national debt. Consider this in your own life. If you have a credit card with 30% interest on it, and for some reason they gave you $1 million credit, and you're just having trouble paying the interest only on that thing, never mind the principal payments. This is just the interest only. Think about it as an interest only loan for a mortgage, right, Joe? You can just do interest only for a few years, right? And you just keep borrowing and keep borrowing and keep borrowing, and now you're looking at trying to pay for food and other things. It's like, wait a minute, my interest payment's too big. And that's what's happening. This is the thing that has been happening, and since COVID, Joe, since the huge printing that went on after COVID, this number is going to get incredibly worse. Imagine if they drop the rates a couple times and start printing again, and what kind of printing are they going to have to do to keep up with what's going on? I mean, I think I just saw Rand Paul in a commercial talk about $1.5 trillion spent on Ukraine and military, and I think it was 1 month. Was it 1 month or 3 months? Some little tiny like, and then and he said, look, they have to do this every 2 or 3 months. Joe, it's not sustainable.
It's just not a pretty picture, and again, really starting as we're getting more pieces of the puzzle put in here. We're starting to get a much clearer picture of what is happening, and man, does it make so much sense now. All of these, I'm sorry, but, $600 move in gold, and that's an average price. So really, a lot of them are saying gold's going to move $1,000 in 12 months. It's starting to really make sense, isn't it? $20 Mint State 62 PCGS or NGC graded Liberties, $2,595. That's $20 below our regular $20 gold piece pricing. And gold now here going to hold 2,400. Looks like we're going to have back-to-back days of closes above 2,400. That's exactly what you want to see as you start stair-stepping up here. Do yourself a favor. Buy as many of these. If you can buy one, buy one. If you can buy 10, buy 10. Heck, if you buy 100, I'd buy 100 of them at 800-951-0592. Jason and I, we're going to come right back with the half-empty cup to wrap up the week. God bless everybody. But jump over to 1360 KHNC.